Hi and welcome to this week's Property Insider video. Today in my chat with Dr. Andrew Wilson, we talk about the latest population figures and what they mean to our housing markets. There's some interesting surprises if you dig into the figures. We talk about the unemployment figures, which surprised on the downside. In other words, our unemployment rate dropped and that's good for our property markets. We talk a little bit about the building approvals and how most of our capital cities are going to get double-digit growth this year. So if you want to keep up to date with all the property news, please subscribe to our YouTube channel and click the little bell icon so we can keep you up to date when a new show comes out. Last week, the Australian Bureau of Statistics reported that our unemployment rate fell to 5.8%. Employment rose by 88,700 people in February, after a rise in January as well. But even better, virtually all these jobs were full-time jobs, and that's good news for our economy and our property markets. Now, of course, our property markets have been surging so far this year, with double-digit growth in sight for almost all our capital cities. And now that more Australians are feeling secure about the economy in general and their jobs in particular, this is only going to place more impetus under our property markets. Now, I recently heard somebody suggest our housing markets are on a Mexican wave. You know, like what happened at the cricket or the football when they used to allow crowds to come to the MCG. One person stood up and started it and the others joined and the whole crowd had their hands in the air and the circular intensity built and built up. Now, as I've mentioned in the past, this is showing itself as FOMO, fear of missing out, when home buyers and investors, they're starting to get scared the market's running away from them. They feel they've got to get into the market, and this is showing in that now even secondary properties are selling well above their vendors' expectations. Normally at the beginning of a property cycle, there's a flight to quality. People remember the type of properties that held their value during the downturn, and they avoid secondary properties. But currently, I'm seeing some home buyers so worried the market's going to get ahead of them that they're compromising on their selection criteria just to get into the market. And unfortunately, we've seen how this ends up when the market eventually slows down, and it will slow down. So to get a better understanding of what's happening in our property markets at present, I look forward to my weekly chat with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Hi, Andrew.
Good morning, Michael. Yes, it's another week, another ho-hum booming housing market.
Well, it is sort of ho-hum because every weekend the auction clearance rates are much the same. But interestingly, even the floods, if there were floods in
Wow.
Sydney, the heavy rain didn't stop the Sydney housing
Yes.
market exhibit auction clearance rates that are again at boom time levels.
Well, beyond boom time, Michael, maybe we should call it the mega boom. But another weekend of record clearance rates in Sydney, over 90% for the third weekend out of four, and very strong results in every other capital city market as well. So the rain didn't stop Sydney buyers pouncing on every property they could. And it's going to be very interesting to see where house prices finish up over the March quarter when we get that data in a short period of time. I think we may get as high as a 5% increase over the March quarter in Sydney. And I think that'll be the strongest of all the capital cities. So we shouldn't really be surprised at that result, given that we've never seen these auction clearance rates in Sydney before. And yeah, perhaps there's a little bit of panic buying happening at the moment in our housing markets, a little bit like the toilet paper events of 12 months ago. Perhaps not as bad as that.
Now, last week, the Australian Bureau of Statistics brought out the latest unemployment figures. And I remember last year people were worrying about 10%, 12% unemployment. And in our regular weekly videos, our chats, you quite clearly thought it wasn't going to get anywhere like that. And I remember you were one of the first, probably the first commentator suggesting it's going to drop below 6%. And you were right, Andrew.
Well, Michael, thank you. Yes, where the predictions, of course, from the government, from Treasury, were for 10% last year. We got just 7% to peak. And now we do have a 5 in front of that unemployment rate. And at the end of this month, of course, we have the end of JobKeeper. There's still some hysterical speculation of the cliff, but whatever jobs we lose as a result of the end of the JobKeeper package certainly will come from a much lower base in terms of the unemployment rate than many expected. In fact, we had hysterical predictions of 20 or 30% unemployment rates. as a result of COVID. And now we're certainly not far away from where we were before COVID. Now, these unemployment rates are still unquestionably too high, Michael. We need to get our unemployment rates into the fours and maybe even lower. And that is really going to take some time to achieve. But we're heading in the right direction, and we're heading there a lot quicker than many predicted. Challenges do remain, but you and I have always been of the opinion that the end of JobKeeper wouldn't have a significant impact on our labour market. And I think we'll find that over coming months.
Your chart here showed that all states reported a lower jobless rate, and that's great. And Queensland was the best performer, falling 0.8%. That was one of the states that people were concerned about with its reliance on the hospitality industry.
And the government, of course, has directed a number of stimulus packages towards the hospitality industry, Michael, which is good news for Queensland, which we know is exposed north of Brisbane to issues regarding the shutdown. So, look, it's good news all around, but let's not rest on our laurels, because we do have a long way to go. Even the unemployment rate prior to COVID, which was 5.4, was unacceptable. We need to get a much lower unemployment rate than we had prior to COVID to start generating the prosperity that really we've been lacking in our economy for a decade or more.
Well, one of the excuses some people gave for a high unemployment rate, one of the things they blamed was immigration and the population growing and foreigners taking Australian jobs. Now, that's a totally different argument that I don't really agree with. But more recently, the population figures came out from Australian Bureau of Statistics, and they have some implications for us moving forward.
These were extraordinary numbers, Michael. We knew that there was going to be a sharp decline in migration, particularly, of course. Population growth in terms of the birth rate is reasonably consistent, and our birth rate is quite healthy compared to other advanced nations. But we saw over 90% fall in net migration in New South Wales over the year ending the September quarter, nearly 90% in Victoria. And it is remarkable now that New South Wales has the lowest of the major states, the lowest net migration over the year. And Queensland now has the highest, and the second highest for net migration over the 12 months ending the September quarter was Western Australia. So Queensland and Western Australia now have the highest rates of net migration of any of the states, and that's in absolute numbers, and obviously as a result of those border shutdowns. But that's the impact now. We've really turned our migration performance profiles on their head as a result of COVID.
Well, in the past, people used to leave Queensland and Western Australia to go to the big smoke. So it's a combination, as you say, net migration of people moving in, but also people not being able to or not wanting to move out.
Yeah, look, Michael, some of the interesting points were that Victoria clearly, in terms of net interstate migration, Victoria dropped around about 5,000. In terms of proportion and absolute numbers, the highest amount. New South Wales interstate migration was actually quite steady. Queensland picked up, and that was really, I guess, what we can look at that was that shift from Victoria into Queensland in terms of migration shifts. And we've got to remember, this is the September quarter, and we still have the December quarter where there were other shutdowns occurring, and perhaps even though that wasn't as strong as the shutdowns we had in autumn, that may have encouraged people it was easier to travel during some of those periods into more net migration out of Victoria. But it's clear that Queensland is a beneficiary of interstate migration from Victoria. Now, the other point is that when we look at net migration in absolute numbers, Michael, there's still around 30,000, even though it's fallen, 30,000 net international migrants into New South Wales. And I would suggest that most of those are expats, Michael. And I think that that's really another factor in our housing markets is those expat numbers, which, as I said, net international migration is the strongest into New South Wales, still over 30,000. And as I said, I think they would be more likely to be cashed up expats who are, again, more likely to be engaged in the housing market than the typical profile of international migrants.
Well, that confirms the anecdotal evidence that we've
Yes.
noticed on the ground that there are a lot of expats back and they're now going to decide to stay in Australia. Now, Andrew, last year, one of the ways our government stimulated the economy was to create a building boom, which,
Yes.
if you're honest, was really to create jobs in the building industry more than it was to help first home buyers. And their strategy offered various incentives, stamp duty, savings, the home builder grant, and it allowed more Australians to get into the property market, and it gave the residential construction sector a couple of years' supply of work, ongoing work, and that's great. But now, just recently, building approvals fell in January. It fell by 19.4%, but that was on the back of a huge rise in December. But it's also interesting when you look at the split that we're building houses, but we're not building apartments, units, and that's going to have a flow-on effect further down the track.
Yes, Michael, it's been a fillip for the house building industry and not really across the board. It's interesting that we've seen the star performers have been, as usual, Victoria and Western Australia. Queensland too has been a beneficiary for new building starts for houses. New South Wales being left behind. And of course, that reflects the Sydney experience where Sydney just doesn't have the capacity to cater on the supply side for all this extra demand generated by the government. Sydney is more of a higher density market. It's geographically further spread really than any of the other capital city markets. And obviously it's a more expensive market as well. So when we look at the overall number though, we see that since its peak back in 2016, despite the stimulus package, Michael, total dwelling approvals are down by nearly 30% nationally. And that's because we've seen a collapse in the apartment construction market. Now, if we look at New South Wales, or we look at Sydney specifically, Sydney building approvals for dwellings are actually down over 90% since their peak in 2016. And given that that is clearly Australia's most populous capital, and also, as we've seen, still the target of strong international migration, we're still, I guess, looking, despite closed borders, at the prospect of a housing shortage in Sydney. And I think really across the board, once this stimulus package, the home builder package ends, which it will at the end of this month. So I still think we're an undersupplied, despite that drop in migration, I still think we're undersupplied going forward, and the unit market in particular. And it's interesting also, Michael, that I've just released a report that looks at, it breaks down the unit market into apartments versus townhouses. And it's certainly apartments, that is a higher density dwellings, have suffered the most through the decline in overall unit development. And townhouses have actually moved the other way. Of course, they're larger and their proportions are growing against apartments, and they're not growing strongly, but they're still increasing. And I think that's a trend that needs to be looked at in terms, from the point of view of planners, particularly in providing appropriate zoning for obvious rising demand for townhouses over apartments.
Well, it seems to be the preferred style of living for more and more families. A large accommodation, but on a more compact block.
Yes.
In a great lifestyle neighbourhood. And that is creating the gentrification in the middle ring suburbs of a lot of our capital cities at the moment, Andrew.
Yeah, take note, planners. These are the issues. I know it's tough. There's a lot of political roadblocks for higher density development, but I think this can be managed appropriately. But there's no doubt that demand will move ahead of supply over the medium to longer term. I think all the data we've discussed today is pointing in that direction. And really, planners and governments have to be ahead of the curve here. We don't want to end up having people living on the streets because we don't have enough housing.
And they've got to build the appropriate sort of housing. And I think post-COVID, more people are going to want more space, more family-friendly apartments rather than the small ones, and definitely more townhouses. Well, only a little while to go before the end of the first quarter, and I don't think even we at the beginning of this quarter would have expected to see such strong property price growth. So look forward to catching up with you again next week when we see how the quarter rounds out.
Yes, thank you very much, Michael.